Last year's growth of a emerging markets ETF was around 20%. The S&P 500, in comparison, has an average return of about 8.9% per annual. The question is, are you missing out a big investing opportunity? Let's find out right after the intro. Hi and welcome guys, my name is Philip and I invest in the stock market. Let's talk about emerging markets and investing opportunities there, and of course if you should invest there. So let's cover the why. So the stock market is basically overrated, but the emerging markets aren't that overrated. That's because there aren't that much stock investors in the emerging markets who also want to have their slice. Now let's cover the what. What are emerging markets? Basically, the emerging markets are emerging economics. There is still a lot of poverty, but there is also a lot of development and growth. The economy there is slowly getting better. For example, in China, India, South America, parts of Africa and Russia. So they are not that big right now, but they are getting bigger and bigger. And because they are starting lower, they got a lot more potential. Here I compared the whole world development to the emerging markets development. You can see the development of the emerging markets is a lot higher because, again, their potential is a lot bigger. Okay then, let's talk about risks. The risks in the emerging markets are a lot higher for a few reasons. The first reason is the exchange rates. Then of course the increased price uncertainty. Also political and government risks. And the last point, for me it's the most important point, increased chance of bankruptcy. Those companies are a lot more likely to go bankrupt. For me, I think the risk to buy single stocks is pretty high because of those uncertainties and risks I just named before. I would invest in an ETF because for me they got similar advantages than single stocks but in the emerging markets, and the risk is a lot lower throughout diversification. So let's get into the meat, the investment opportunities. Here you can see the top 7 emerging markets. The biggest is China. I am personally not the biggest fan of that market because of the political system in China. And I think it's already a little late to get invested in China because they are pretty big already. But nevertheless, I will also cover an opportunity in China. And it is China Mobile. It's a similar company than Verizon Communications, but a lot cheaper. So the price for China Mobile is $7 and the price for Verizon is $65 right now. If you wish to have a complete analysis about China Mobile, just write a comment and I'm going to cover that in the next videos. Okay, let's switch to Russia with Gazprom. It's a company that's digging for gas basically. It owns 16% of the global gas reserve and 71% of Russia's gas reserve. And with its current value of $6, it's pretty cheap as well to buy and invest in. What I tend to like most is Eletrobras. It's a Brazilian energy company. It's the largest company in the energy sector in complete Latin America and is pretty cheap at $5.45. But a big but is following. I tend to be more interested in ETFs in the field of emerging markets because there is a lot less risk throughout diversification. I would look out for a fund, a ETF, that size is above 1 billion because you just get more safety out of that. The most important thing to look out for in an ETF is that it is physically, so the shares are really there and it's not just simulating the growth rate. Okay, let's have a look at the Amundi Index Solutions MSCI Emerging Markets ETF. I picked that because it's got a decent growth rate, it's physically, and it's valued at about 2.8 billion euros. It costs around 0.2% per year, and the dividends are reinvested. Now you can see the sectors where the ETF is invested: basic materials, financial services, real estate, technology, and a few more. Here you can see the most is invested in Asia, a little bit in Latin America, a little bit in the Near East, and a little bit in Europe, but just in the emerging markets. Most of the emerging markets ETFs got a main position in Asia. That's just a natural thing right now, so it's pretty hard to find an ETF that's not that high invested like mine with 80% in Asia. I compared now a lot of the whole world to the emerging markets. But if you compare the S&P 500 to an ETF that's acting, a normal ETF that's acting in the emerging markets, you can see the S&P 500 is a lot higher. So it rose a lot higher. So I would basically not invest in the emerging markets because I think the S&P 500 got a higher growth rate and it's a lot safer to invest in stocks in the developed world. Well, we came to the end of the video. I hope I could help you with your decision if you should invest in the emerging markets. And if you liked the video, don't forget to follow and like the video. If you got any questions, just write a comment and I'm gonna help you.